Hello YouTube, good evening, good night, good morning, depending on when you're watching this. Welcome to another episode in our trading tips playlist. I've been wanting to make this video for a long time because there's so much misinformation out there when it comes to trading, and depending on where you are in your trading journey, you've likely come across breakout trading because every single moon boy, every single influencer, every single kid on TikTok seems to want you to trade breakouts because they'll pick a perfect example on the chart where a breakout has worked and they'll show significant profits. You know, the sort of title where you'll see something like, "This is how I made $1,000 trading the daily open," or something along those lines, right? So basically they want you to get involved with whatever they're selling or whatever affiliate link that they're promoting today or whatever it is. But the reality is that these guys are not traders. And the reason why I know they're not traders is because breakout trading has one of the lowest hit rates in trading, right? And it's not straightforward, it's not simple. And I can honestly say the last time I took a breakout trade was back when, a few years ago, when Bitcoin finally broke out of 20k. That was the last time I took a breakout trade because I don't trade breakouts. And I'm going to show you today why I don't trade breakouts and why you shouldn't trade breakouts and why you should flip your mentality and understand how to trade either a range or look for key horizontals on your chart. Okay? So we could literally pick any range and I can show you this. Any range at all. But I've picked one because I've gone through the details and I want to talk about it. And you can see it on the left-hand side. So on the left-hand side, I've got a delta profile screen. So we can actually see what's happening within the candles, and we can actually see, you know, where buyers are coming in, where sellers are coming in, what people are doing, what good people are doing, what bad people are doing. On the left hand side, we've got an example. So this is, at the moment, this is the current high on the Bitcoin year for, if you're watching this is 2023. Okay, so that hit 31k. Before we hit 31k, we had a range, right? And this is a range. This is for the Spitfire traders in our group. This is our bread and butter, but this is also where breakout traders go wrong, and I'm going to show you why. So I'm going to open this. I'm going to throw this on. We're going to throw a little bit of context in this actually first. So we're going to open this up to big screen. Right. I just want to put a bit of context on the reason why price action has stopped here is because we are in this sticky zone here. Right. So what I've done is I've thrown on this red line. Hopefully you can see that on your screen. I'll make it a little bit brighter. There we go. So we're in a sticky zone. So for me, this is resistance. We've come out of this range. We've come into resistance. Okay. So this is a little bit of context. The only way you be trading anything looking for higher on this is looking for the liquidity above these highs, effectively the stop losses. Why do I say that? Is because that's how the market works. And this is the key concept when it comes to breakout traders. And this is where they don't understand what they're doing. So the market will always move towards liquidity, right? And what do I mean by that? Well, where's the stop losses, right? So we know full well that above these highs, anyone that's taken swing shorts off these, there will be stop losses. Okay, just like this low here, there will be stop losses down here. There was stop losses here. They got run. There was stop losses down here. There'll be stop losses down here. The stop losses all over. Wherever you see a key pivot in the chart, there'll be stop losses. That's liquidity, right? And the market will always move towards liquidity. No matter what trading strategy you're using, whether you're using order blocks, order flow, Elliott wave theory, whatever trading method you use, that's how the market works. It will always move towards liquidity. So this here is a sticky zone. Above it, there's liquidity. Right now, obviously, we've grabbed the liquidity from below it. So this is just a little bit of context, right? Now, what we're going to do is we're going to go back to this screen. We're going to go back onto the 15-minute chart. In fact, let's go on to the 30-minute chart. Oh, no, but we'll use the 15-minute chart because we can see this. We've got a little bit more price action within this. Now, let's zoom to here, and then let's throw on, not that parallel channel, let's throw on this parallel channel. There we go. So this is the range, right? This is the range that we're talking about. So this is this same range here, and this is this range here. Okay. So price has come up. It's hit a high, and it's rejected and hit a low. Now, as a range trader, and even if you're not a range trader, now straight away you can spot, okay, there's resistance here, and there's support here. Okay. Now it's not confirmed, but we can start to see early signs. Right, this to me is an early sign of a range. Now, for a breakout trader, I'm going to throw this up here, and I'm just going to move this out of the way. This is how a breakout trader sees this. And I've already gone through and marked these out, right? And I've got some stats down here, and we're going to go through these stats soon. Now, on top of this, in fact, I'm going to hide this for the time being because I need the down there. Now, as a breakout trader works, and how these kids and influencers will teach you how to trade, right, is they'll say long the breakout or short the breakdown and wait for volume confirmation, because that's what they all say. And it's just, it's like a script they're all reading from because none of them have a clue, right? And what I mean by that is they're using TradingView's built-in volume bars. Now, for me, these aren't worth shit. I'm just being honest about that. I do not rate these volume bars because these volume bars do not show you anything that's going on within the candle. Okay? So I'm going to give you an example. So here's, as a breakout trader, you've seen this wick up. You've seen high volume, and again, this is what they're all banging on about. All these kids, they're all saying, wait for confirmation, wait for high volume. So you've got this high volume coming in here. So therefore, as a breakout trader, or as someone that's very inexperienced and new to trading, you're looking at this and going, great, breakout, big volume, it's way above this moving average line we can see here, big volume, long the breakout. So you're long the breakout. Now, where you're putting your stop, now again, this is one thing that always baffles me with breakout traders, because it's like, well, realistically, where's your risk to reward? So for me, here, I've just selected this last low before the high, okay? So I've chosen to put it here. And what you're targeting here, God knows what you're targeting as a breakout trader, but let's be honest, above this red box where that liquidity is, like I pointed out earlier in the video, right? So you're targeting a 2.4 risk to reward trade. So what does that mean? Well, if you've got a 10k account balance and you are risking 1% per trade, that means your stop is worth $100. So if you lose this trade, then you've lost $100. If you win this trade, then you've got $243. Okay? So that's how risk to reward works. And again, if you don't understand that, I've got another video on it on how to calculate your position size within this same playlist. Right? So here's your first trade. So you've longed the breakout because you've seen the volume confirmation. Now, what happens when we actually look into this? This is the same candle. This is the same wick here. We look into this. So we can see here, it's not a significant volume above this wick here, which, again, this yellow line is the range high. But what we can see here is the breakout traders. Now, not massive volume. Not massive volume at all, hence, it's a low time frame range. Not massive volume, but we can see here, breakout traders trying to get involved. These are market buys, by the way, these blue lines. These are market buys. So this is where the amateur trader is trying to long this breakout, right? Because they've seen big volume. They've seen big volume. And admittedly, it was a decent volume candle. This is accurate to this. Absolutely fine. I'm not saying this isn't accurate, but it's not saying what's going on inside, right? Now, what we can see here is we can see open interest is in no man's land. So this is a mixture of shorts getting stopped out, anyone that shorted this first high, like a degenerate, because there was no other confluence here to short this high. So you can see shorts getting stopped out, and you can see longs coming into the market, and in the end, it reversed. So you've stopped out, so now you're down $100 already. So your trading balance has gone from being 10k to 9,900, okay? Then what happens? You've come up. Now I'm giving breakout traders the benefit of the doubt here because they were only a slight wick above the level, so you've not traded that, even though you got significant volume, according to this, okay? Significant volume, but you just wicked above it. So I'm going to say that as a breakout trader, that's not gone high enough for you. You may have taken that. If you did, again, you've taken another L. I'm going to give you the benefit of the doubt. But again, another reason why this is worth nothing. It's pointless. Don't even bother having it on your chart. I don't have it on my chart. Just had to add it on today for this video. Okay? This is my volume. Okay? For anyone wondering, this is Exo charts. Right, there's other platforms out there, but this is what I use. Now, another week down. This week down, again, on a significant volume spike, according to TradingView's volume bars. So you've longed this breakout. Now what happens? And again, this is where every man and his dog, like all the influencers on crypto Twitter, on YouTube, they start screaming breakdown, breakdown, breakdown. And this is an even better example because we can see here that there's a lot of new longs opening up into the lows. The point of control of the candle, which means the significant amount of volume, is right in this wick. look at this. We can see this. 1.1 million of sells, 284k, 1.2 million of sells, 357k. You can see them all here. So this is people trying to short a breakdown, right? In the end, didn't get any follow through. Came up and it stopped you out. Okay, again, I've just used this stop loss because it was the last swing. Okay, so you're down again. You've taken another loss. Now, bear in mind, your trading balance is no longer 10k, so your balance is going down now. Now, this is another one. Now, I'm giving these guys the benefit of the doubt here with the breakout trade because they finally got a breakout trade. I'm going to pretend that you didn't long these two, even though realistically you had the volume there to back it up, so you probably did. So you're down even more. But I'm going to give you the benefit of doubt and say that you long this one. Right? So you long this one, and again, you're targeting that liquidity up here. However, you see it start to stall. If you're a smart trader, I mean, as a breakout trader, you're probably not that smart in the first place. But if you're a smart trader, you might have skimmed some profits. So what I've done is I've worked it out that you've skimmed some profits off here, but you're still targeting up here. So you've actually made a very little return on this. And the reason why you've made a very little return is because your risk to reward, bear in mind, you've only skimmed some profit. So you've not got 1.56 return because you've only taken a fraction of your profit. So if you're lucky, you might have made $30 on that trade. Bear in mind, you're already down $200. Right, so I'm giving you a benefit of doubt on that one. Right, and again, you got volume. Okay, now for me, this actually was a short in the end because it was a level that we were interested in. But that's by the by because that's not to do with today's video. Okay, so next, you had another one. Again, you had more opportunities here, but there's no volume. So all right, I'll give you the benefit of the doubt. Now you've got another opportunity here. So you've longed this and you've just taken another loss. Now, here's another one, another breakdown. Now, again, I'm giving you the benefit of the doubt on this one. That you may have skimmed some profits because you've gone into this cluster here. So you may have skimmed some profits, but from a risk to reward point of view, that's crap. That's 0.83. So in this instance, if you're risking $100, then you're only getting $83 profit if you're fully closed out. And let's be honest, you're a breakout trader. You want in a big move because that's how everybody markets breakout trading. You want these significant moves. Okay? So you may have taken some profits, you may not have taken some profits. Then you've come back up, stopped you out. And then finally, you've seen this breakdown, and what you've done is you've chased this breakdown. So the reason why I've put the entry here is because you've seen this breakdown, and this has happened very quickly. Very quickly. Good volume. So very, very quickly. So you're a degenerate and you've just smashed market sell. You've just smashed it. You've just smashed the button, and likely you've been filled all the way down here. I mean, realistically, depending on how liquid or illiquid the altcoin pair, whatever you're trading, you may have even been filled even lower. But I'm going to give you the benefit of the doubt. You're being filled up here, right? Stop loss, again, really poor. Put it up against this high, this last wick high before the breakdown happened. Okay, and in the end, if you'd have held on to it all the way to the low, again, this is a big if, then you may have made a bit of money back, right? So this is the life of a breakout trader. So you've just screwed up that one. You've screwed up that one. Giving you benefit of doubt that you've made a tiny amount of dollars on this one. You've screwed up that one. Benefit of the doubt, maybe. Did you get a few dollars out of that? Maybe. And then you finally won one. Okay? So, realistically, it's not good. I mean, let's be honest. Let's just scrap that off. Right. So, out of 1, 2, 3, 4, 5, 6 attempts at a breakout trade, you've profited realistically on 1.5. Okay, so now we bring up those stats again, and this is where it becomes real, right? So I'm just taking this one range, and most ranges do the same thing. You'll have a range, you'll have respect at the highs and the lows, and then you'll have deviations, swing failure patterns where people are trapping liquidity. Okay, so breakout trading, starting balance 10k, you're risking 1% per trade because you understand risk management. I'll give you that. At 6 trades, you got a 33% win rate, and your final balance is $9,923. Okay, and again, that's me being quite generous with that. Being quite generous. So you're down. You're down. We can see this with the order flow, like I've just been showing you. We can see what's happening at each one of these lows, and this is the beauty of order flow software. Right. So now let's do a contrast. to, if you didn't trade breakouts and you actually put some effort in and learn how to trade a range properly, and this applies to triangles, this applies to patterns, head and shoulders, all that bullshit that people teach you. And I say people, I mean influencers, because they haven't got a clue how to trade, right? So let's just clear this up and let's go back into it, right? So we'll get rid of the breakout trading, and now let's bring on the range trading. Now, I'm not going to spoil this, I'm just going to leave this here now. You can see this. Now, if you trade a range, like how we teach in the group, or how many successful traders work, then it's a completely different experience. And I know your eyes are glancing down here already. You can see this, right? So let's see what happens. So when these happen, and we're seeing this in real time on order flow, so I can see that this first high here, I can see people are trying to trade this breakout, and all it is a liquidity grab of these stop losses, right? And a few small accounts trading this breakout. So that for me is a counter trade all day long. Range high, breaking the resistance, I'm looking for a short. Okay, so first short, happy days. It's gone all the way through to the other side of the range. Great, 3.5R. Okay, so if you're risking $100, you've just got 350 back, right? Next trade, come down, you come back up, you've back tested it. Another trade, 3R. Okay, stops below this swing low because you've got clear invalidation levels now. Unlike when you long in a breakout, if you're long in this breakout, where's your invalidation? If you're long in that, where's your invalidation? Well, realistically, it's probably all the way back down under one of these swing lows that caused the high, okay? But when you're trading the range, you've got clear invalidation now, okay? So your second trade, winning. Third trade, okay, we've taken a loss. Don't beat yourself up about it. This is first loss of the range. No problem at all. Seeing this happen, it's come back in, it's come back, it's back tested it. So we've entered a short here, right? We've come back down to EQ. You could have skimmed some profits. You might not have done. You've come back up. Now again, your stops are all the way up here. Not a great risk to reward, isn't this? It's a really bad example. It's not something how I trade, but I'm using a very basic structure here. You've come back in, and then you've come to the range lows. Okay, so you've got 1R, well, just over 1R back. Okay, so happy days, winning trade. Cool, move on to the next one. Next one, we've taken a loss. We've taken a loss. Okay, another loss. So you've just lost that one. No problem. So you've just lost 1R there. You've lost 1R there, and you've lost 1R there. And then you've come back up into range highs, got the short entry, seen it come down, you've seen it come back up, and you've started seeing it come back down. Now at this point here, now again, same concept. This is where the guys trading the breakout are getting FOMO because they're seeing this really quick move down. So likewise, where the breakout trader is seeing this quick move down, a range trader is also seeing this quick move down and looking at this range low and thinking, is it going to hold this time? Because it's a very fast move and there's no reaction here. This is on the 15-minute chart. There's no reaction here. Okay, so this I am using to my advantage, but instead of having to short down here in the breakout, I'm already short from higher. So the difference is you're getting a 2, maybe 3R trade from shorting down here. Again, we didn't know where it was going to go, but in the end, you got that, and I got an 18R trade. Now, realistically, I'm not a degenerate, so therefore I would have been skimming profits on all the way down, because that's how I trade. I'm targeting the liquidity, like this liquidity. Look here, we've got a low here. Let's get this. We've got a low here. Price runs the liquidity, takes the stop losses, has a bounce. Okay, this is what I mean about liquidity. This is something you need to understand. This is a very basic concept, but it's crucial to know. So in the end, I'm being very critical here, and I'm going to say, well, by the end of that, instead of it being an 18R trade, yeah, you may have walked away with 6R. Okay? If you're a degenerate and you held onto it all the way down, looking for a higher target, higher time frame target lower down where it did stop, then fair enough, you may have got 18R. But I'm basing today's calculations on a 6R because you'll have been skimming profits all the way down this, because this is how you trade a range. Okay? And then you get your breakout your range. So let's have a look at the difference now. So range trading, starting balance, exactly the same, 10k, risk 1%, 6 trades, same number of trades, but instead of a 33% win rate on your breakout strategy, I've now got a 66% win rate. Okay? 66% win rate. Okay? So I won way more than I lost. And then my final balance in the end is 11,185. So I'm up over 10%. Okay. So again, big contrast to the breakout traders. Here, breakout traders, you're down. You've lost money. You got a 33% win rate. And you lost more within this than even your breakout trade came back. Okay? So this is why it's important, and this is what people don't talk through when they're trying to explain this. And this is what I wanted to get across today. So understand this. Don't trade the breakouts. And again, this applies to triangles, head and shoulders. This applies to any form of breakout trading. Okay? These volume bars, don't bother having on your chart. They're useless. Absolutely useless. Okay? If you want to get some decent software, get something like ExoCharts. Okay? I'm not affiliated with them or anything along those lines. ExoCharts, there's other companies like Atos. There's many of these. But these are useful, but you've got to understand how to read them. Otherwise, it's very, very confusing. But if you're going to do anything, even without this, learn how to trade a range. You can see the difference. That range, same number of trades, a range trader wins. Breakout trader loses. And again, as you saw, I was very generous with the stats for the breakout traders. This could have been a hell of a lot worse. Right? Okay. Hopefully you've learned something today, and you've learned that breakout trading is not a great idea, and it's the reason why I bang on about it all the time. Okay, if you did, let us know down in the comments, and if you want us to do some more of these trading tips playlists, then again, let us know down below. Thanks for your time. Bye-bye.